So I had a really interesting call today with my mortgage servicer of a conventional loan because I called to get information on what the assumption process is since assumable loans are becoming really common now. The websites are starting to advertise that mortgages that are assumable on Realtor.com and Zillow. So, I mean, it's becoming a big deal. And I thought, okay, maybe everybody knows FHA and VA have always had an assumability clause. Conventionals have not. So I thought to myself, maybe this will be similar to like back in the day when the market made drastic changes and all of a sudden you could do short sales and modifications and things like that. So it prompted me to call my servicer and ask. So I asked them, is my loan assumable? It's a conventional loan. And I was told yes, and provided very, very few details. But I thought, okay, that's great. So we talked to somebody who was interested in purchasing the home, and he was really serious about it. So we decided to expand on that initial conversation. So we called back. I just want to be sure that we can get this loan assumed. What are the steps? What is the process? And they walked me through the steps of how to initiate the loan assumption. Now, this is not something that a lender normally does because, if you're buying a home and the loan is assumable, all that I can do to help in that situation is actually provide you with a HELOC or home equity loan to bridge the gap. So say you're buying a house for $400,000, homeowner has $200,000 owed, then I can bridge the gap of that financing with a home equity line of credit or a home equity loan. Other than that, you would have to come in with the cash difference yourself. And so we can do things like that, but I've never bothered with an assumable mortgage because where does that benefit any of us? Nobody's asked me to, and it just doesn't make much sense that I would do that, right? It has nothing to do with me. So because I am the homeowner and we were considering selling the home, it made sense for me to gather more details and figure out the process. Now, what she did say was in order for the home to be assumed or the mortgage to be assumed, it had to be an owner occupancy, meaning that the person who was going to assume the loan had to live in it and intend to live in it as their primary residence. Second was they could not have any bankruptcies. They had to credit qualify. To me, that makes sense because on a conventional loan, they're much more strict with bankruptcies and the credit qualifying criteria. And then we had to have a purchase agreement. So I asked, what is the timeline for that? She said it can be 3 to 12 months, which immediately I was just like, okay, yeah, this isn't going to be all that popular. Maybe it's faster on the FHA and VA since they do have already an assumability clause. Who knows? So we continue, partly because it was such pain just to get through to a live person. I'm like, I'm not making this phone call again. We're going to act like this is already going. So I said, okay, it's already in process. We have everything in effect. What's our next step? Okay, then we'll submit your request for the assumption and we'll transfer you to the assumption department. They actually end up calling it a successors and interest team later on, but initially we referred to it as the assumption department. So I make it to the assumption department and we go into more detail on the process, what we're doing. And I confirm with them, I said, so this is a Fannie or Freddie Mac, right? Like these are the terms for Fannie or Freddie Mac, right? And she goes, oh, well, actually with conventional, yes, that's Fannie Mae and Freddie Mac. But you have only 4 options for transferring your mortgage to somebody else. So with VA and FHA, it's completely different. In fact, with VA, you can transfer a VA loan to somebody who's not even a veteran. It's very lenient. But it doesn't mean it's quick. So it's probably still the 3 to 12 months. It's going to depend on your servicer. So back to Fannie and Freddie. If you have a loan with Fannie or Freddie, aka a conventional mortgage, there are 4 ways that you can have that loan assumed by another party. So one is if the homeowner has passed. If the homeowner has passed, it can be transferred to a buyer, unrelated, or the next of kin. So the buyer, it would have had to have gone through probate, or the successor, like the whoever was on title, who, like, say I'm husband and wife and husband passes away, I am on title, so I by default am the sole owner. I can then transfer that mortgage to the new buyer. That can be assumed because the homeowner died, right? Or the next of kin. So that's option number 1. Option number 2 is in the event of a divorce. So husband and wife, or spouses, to be PC, 2 parties own a home. They are married to one another, and one of them passes away. The surviving, I'm sorry, not passes away. They divorce. The spouse who wants to maintain the property can credit qualify and assume the mortgage, separating it from the other spouse. So we always thought that that could only be done through a refinance, through court. Usually they'll tell you to refinance, but it can be done through an assumption as well. So option 3, transfer of ownership to a spouse or a child. So if I wanted my child to purchase this home, then they could assume the mortgage, even though it's conventional mortgage. And then option 4 is transfer of ownership to a trustee that is part of the trust. So I would essentially have to add the buyer to the trust in order to transfer the loan to that person, but I wouldn't add somebody to my trust who I didn't want in my trust in the first place. So that was very informative. It was a lot of information that I hadn't expected. I really didn't know what to expect because there's a lot of misinformation out there, and I had already been told one thing, and then this representative who finalized the thought process with me actually was very informed and had an NMLS license. Most of the customer service reps you speak to do not carry any NMLS license, have limited information about the mortgage process, just basic information. So do your due diligence if you are looking at properties that are listed for sale with an assumable loan. If you see that it's a conventional mortgage, I doubt that it's going to go through because those are 4 very specific pieces that you have to match up with in order to actually assume that mortgage, and the amount of time that it's going to take. I cannot see any seller sitting on a property for 3 to 12 months so that they can transfer the mortgage to another buyer. But who knows? I'm surprised in this industry all the time.